Did you know that you can donate more than just cash to charity? Did you know it could also be more tax advantageous to donate long-term appreciated non-cash assets, like stock or private business shares, especially if you're using a donor-advised fund? Here's why. Donors who donate long-term appreciated non-cash assets may be eligible for an immediate tax deduction for the fair market value of their charitable contribution. They can also potentially eliminate capital gains tax and the Medicare surtax, which combined could be up to 23.8%, allowing them to give more. Let's take a look at an example from a Fidelity Charitable donor who supports basset hound rescue groups across the country. Ellen had been making direct cash donations to multiple organizations for several years. Then, her financial advisor recommended opening a donor-advised fund to contribute company stock she had received as part of her compensation package 10 years ago. If she had sold the stock, she would have owed nearly 24% in taxes. Instead, Ellen chose to donate $50,000 of the stock to a donor-advised fund over 3 years, making it possible for her to use every dime of the appreciated value to give to multiple basset hound rescues. That approach meant up to $11,900 less in taxes and more to charity. She also didn't have the hassle of filling out multiple forms and tracking multiple tax receipts. The most common non-cash asset people donate to Fidelity Charitable is publicly traded stock that has appreciated more than a year. But you can also donate cryptocurrency, restricted stock, private business shares, and other assets. While donating these assets could be a tax-smart move for you, it may involve some added complexities. The harder the asset is to liquidate, the more complex it can be to give. This is where a donor-advised fund, like the giving account at Fidelity Charitable, comes in. A donor-advised fund can help remove the hassle of donating non-cash assets, especially if you're working with a sponsor with expertise in these donations. At Fidelity Charitable, for example, donating appreciated stock can be as simple as logging into our donor platform, selecting the most appreciated securities, and transferring in just a few clicks. In as little as 1 business day, the full value of that stock will be converted into charitable dollars, available to use to support your favorite eligible charities. If you're donating something more complicated, like private business interests, the process can be more involved. But we have a team with over 30 years of experience who will guide you through the entire process at no additional cost. What's even better, with a donor-advised fund, assets can potentially grow tax-free within the fund when invested. This means your philanthropic impact can multiply over time, providing even greater support to the causes you care about most. Each person is unique, but regardless of what cause you support or what type of assets you have in your portfolio, the lesson is the same. It's smart to consider all the assets in your portfolio when you want to give to charity. Are you ready to look beyond your checkbook to potentially maximize both your charitable impact and your tax savings? Get started with a donor-advised fund today.